Hi, this is Donkey Capital. Welcome to my personal observations about the ICT silver bullet model. Please take your time to read this before we start, it is really important. Once again, I have not invented any of these concepts. I have studied the ICT mentorships and I keep studying his concepts. These are my personal ways to trade the ICT silver bullet model. But I strongly recommend visiting the ICT channel and learn from him directly. However, I'm sure that you will find this video insightful, and I hope that it helps you in your journey as a trader. So let's start by knowing what we are looking for when we are about to trade the silver bullet. First of all, we must have a clear draw on liquidity that offers at least 20 handles on the Nasdaq or 10 handles on the S&P 500. This can be in form of a previous day high or low, previous session high or low, new week opening gap, new day opening gap, or an imbalance in a premium or discount. Next, we will be waiting for price to create displacement into the draw on liquidity's direction. This will confirm that the silver bullet might take place. After seeing displacement, we will wait for price to trade into a fair value gap in between 10 a.m. and 11 a.m. So the PD array that is used in this model is the fair value gap. With that being said, we have the most important aspect to successful trading. It does not matter which model you use, but you need to trade on high probability conditions. Avoid trading when the indexes are not correlated, when the dollar is moving in the same direction of the indexes, FOMC news event, or NFP if you want to succeed as a trader. Before we get into the charts, if you are a beginner, I recommend you to tape read this model first before starting to paper trade it. You should be aiming for 10 handles at first, then you will progress and you will be able to capitalize the whole move, but I personally prefer to take the bread and butter trades and target somewhere in between 10 or 20 handles. With that being said, let's start. Judas swing cancellation model. First example. Hello folks, this is our first example of the Judas swing cancellation silver bullet. Look how price went down and swept a sell-side liquidity pool before reversing and going to the buy side. If our bias is bullish and we see this scenario unfold, it is quite easy to look for a silver bullet entry aiming for the high of the 9:30 a.m. candle. This yellow shaded area is the AM session Judas swing. We will be looking for a move that goes above its high as our silver bullet. These are the two fair value gaps that could be used as a silver bullet entry. Our stop must be below the FVG candlestick low. Note how price kept spooling higher through the silver bullet time window. Our low-hanging fruit target would be the Judas swing high, then another partial at the buy side liquidity and a runner left to see if it wants to keep pushing higher. Second example. Now let's move into our second example. Note how price swept a sell-side liquidity pool before reversing. We will focus our attention on this shaded area, which is the silver bullet time window. This is what it looks like on a 1-minute time frame. Feel free to pause the video and study the chart and look for the silver bullet trade before I start making annotations. Well, I've divided the session into 4 quadrants. First of all, we have the Judas swing into the sell-side liquidity pool. Then we see a small consolidation until 10:30 a.m., which makes a market structure shift to the upside creating displacement. That is what we are looking for when searching for silver bullets. The 10:30 a.m. is key. If you stick until the end of the video you will be rewarded by a specific model related to this time. Finally, the 10:30 a.m. candle that made the market structure shift to the upside with a strong energetic upclose, created a FVG. This is our AM session silver bullet. Note how the candlesticks respected the FVG, beautiful isn't it? Well, our stop would be at the FVG's low. And our target would be the high of the swing and potentially the high of the Judas swing, which offers a potential gain of 50 plus handles. Third example. This is our third and last example for the Judas swing cancellation silver bullet. We look for clear liquidity pools, like the one that was swept right here. They were obvious relative equal lows. Our focus will be this shaded area. This is what it looks like on a 1-minute chart. Take your time and look for the silver bullet that we have been studying. Well, as you already know, the first move from the 9:30 open presented a Judas swing right into the sell-side liquidity pool that I showed you. As you can see, price made a market structure shift with a fair value gap to the upside after sweeping the sell-side liquidity. This is one of my favorites models to trade. It's really easy once you have backtested it enough. Here we have some important things to mention. The first is that our silver bullets should be taken in a discount level, that is why there is a fib measuring the swing that made the market structure shift. Also, if you have studied the ICT 2022 mentorship, which I highly recommend studying, you will find this setup familiar, since it is a 2022 model setup blended with a silver bullet. ICT mentions that if there is 2 or more fair value gaps in a discount, if we are bullish, our stop should allow for price to trade into all of them. That is why on this example, our stop must be at the swing low, allowing price to trade into the FVG that is noted with the 2 lines. For targeting, we could aim for the Judas swing high as our final goal, but I would prefer to bank in some profits at a premium FVG in relation to the Judas swing, even though price ended up taking the high of the Judas swing later. Let's move into the continuation model. First example. Normally, this model is framed on a directional bias based on a higher timeframe chart. When this model is presented, it can be really easy to find silver bullets, and it is really satisfying to participate in this kind of moves. Since price will deliver without resistance, and it usually is an energetic move into our target if we are on side. As you can see, I have noted a sell-side liquidity pool that was rated before going for the all-time high. To put you in context, the bias was bullish. We were looking for a move above the all-time high. Remember, we never should try to pick top or bottoms on a marketplace. This gray shaded area is where our trading will occur. This is what it looks like on a 1-minute chart. I invite you to pause the video and look for the silver bullet. As you can see, after trading above the all-time high, price created a fair value gap with a bullish order block that was used to send price higher. In this case, I personally would feel comfortable placing my stop at the swing low near the bullish order block. For targeting, we have our low-hanging fruit buy-side liquidity pool with the possibility to leave a runner for a potential expansion. If you take a look, note how price created a FVG at 9:30 a.m. ICT taught that the first FVG into the session can be used by the algorithm as a reference point. That is why it is important to note the first FVG that is created. As you can see, price used it to run the all-time high on this example. Second example. Moving into our second example of this model. We were participating on a market maker sell model aiming for a sell-side liquidity pool as our draw on liquidity. Once again, this is what it looks like on a 1-minute chart. I highly recommend you to pause the video and figure out what could be used as a silver bullet trade. Note how price swept a high and then made a market structure shift to the downside. The orange shaded area is a daily FVG, by the way. In a perfect world, we would be looking to sell on the FVG that made the market structure shift to the downside, as a 2022 model entry. However, since this is a continuation model, we must be patient and wait for the opportunities that the market offers us. Here you have what could be used as a silver bullet entry. As you can see, there is plenty of opportunities to participate on the move. So do not try to chase price, we enter on logical levels with a clear bias in mind. The first FVG that is noted offers a 120+ handle move, a monster trade. Besides, you could pyramid into each FVG adding contracts on logical levels. But this is only for the experienced ones. I personally prefer to take baseline hits, even though I will try to improve to a point where I will be able to participate on the whole move. Third example. This is going to be the last example for the continuation model. Note how price rated a buy-side liquidity pool, and after that, it started to move lower with energy towards the daily FVG noted in orange. This is what it looks like on a 2-minute chart. We have the London lows noted as our sell-side liquidity. Now that you have the chart clean and noted, try to find which fair value gaps could be used as a silver bullet entry. Pause the video if needed. Well, we have 3 possible entries. The first one would be the FVG that created displacement and the market structure shift. This is also a clear example of the 2022 model that ICT teaches. Note how the stop would be placed at the FVG's high, which is above a bearish breaker too. The second entry would be the next FVG. I want you to note how price keeps respecting the FVGs as it keeps spooling towards our target. This is a really nice example of when the silver bullets should be taken. The move, and finally, our last FVG is the best one. This is the one that I personally would have preferred to take. Why? Because after trading into the FVG consequent encroachment, it started to move towards the sell-side liquidity pool with speed. Bonus model. This is a bonus model that I also like to use. It is based on the 1030 reversal. If you look at old data, you may see that quite often, 1030 AM manipulates price in one direction or the other, but sometimes, it creates a reversal pattern in what could be a market maker model. It tends to create fast and energetic moves which are satisfying to participate into. Now have a look at this. Where did price created the high of the day? Yes, exactly. At 10:30 AM. This is not random, folks. Backtest it. Well, I invite you to look at this chart and make your own annotations. Pause the video if you need it. This is what we have. At 9:30 AM price starts to consolidate. This is the initial consolidation of a market maker sell model. After that, it starts moving to the upside until 10:30 AM. Then, we see a market structure shift with a fair value gap, which is the low-risk sell of the market maker sell model. Note how price respected to the tick the FVG, it just went into it by a tick, which makes it an institutional order flow entry drill. And finally, after 11 o'clock, price melted down into the sell side. Remember, the silver bullet can be held after 11 AM if our draw on liquidity has not been met by then. Well, you have made it to the end of the video. I hope that you have found it insightful. If you learned something, leave a thumbs up. And if you have any questions, feel free to leave them in the comments section. Thank you for watching and trade safe.